The financial services sector is in the middle of a significant transition brought on by the increasing availability of digital technology, shifting tastes of customers, and the introduction of new regulations. The transformation to digital is causing operational changes within banks as well as changes in how they interact with customers and provide financial services. In this video, we will investigate the most important developments and prospects in the digital transformation of the banking industry. Let's start, but first subscribe to our channel. Let's continue. Applications for mobile banking. The majority of users now primarily access their banking accounts using mobile banking apps. Banks are making investments in user-friendly apps that offer a wide range of services, ranging from checking balances to completing complex transactions and managing assets. These apps are also becoming increasingly popular. Free and open banking. Open banking projects are making headway in many parts of the world. They make it possible for third-party suppliers of financial services to gain access to consumer data with the customer's permission. This trend encourages innovative ideas and healthy competition, which ultimately results in the formation of new partnerships and services. Chatbots and artificial intelligence, sometimes known as AI. Chatbots and virtual assistants powered by artificial intelligence are becoming increasingly common in financial institutions in order to improve customer service and streamline processes. These chatbots offer clients support in real time, respond to their questions, and aid them with completing mundane chores. Analyses of the data. The use of data analytics is helping financial institutions acquire new insights into client behavior, risk assessment, and the identification of fraud. The use of predictive analytics can assist in the customization of product offerings and the enhancement of credit score. Distributed ledger technology and virtual currencies. The use of blockchain technology and cryptocurrencies, which are still in the process of developing, is being investigated for the purpose of making international financial transactions and smart contract applications more secure and efficient. Customization of content. Banks are currently leveraging data to customize the services they provide. There has been a recent uptick in the prevalence of personalized financial advice, targeted marketing, and product recommendations. Preventing fraud online and maintaining online safety. Cybersecurity risks are increasing in parallel with the expansion of online banking. The banking industry is making significant investments in various cybersecurity measures, such as encryption, biometrics, and threat detection systems. Possibilities presented by digital banking. Improvements made to the experience of the customer. Through digital transformation, banks are able to give customers with an experience that is streamlined and simple. This has the potential to result in enhanced consumer loyalty as well as retention. Cost reduction. The automation and digitization of business operations can result in a large reduction of operational costs. Banks have the ability to more effectively deploy their resources and channel customer savings into new product development. Participation in the financial system. The availability of financial services can be expanded to underserved communities through the use of digital banking. People who live in rural or outlying areas now have access to banking services thanks to mobile banking and digital wallets. Original goods and services. Banks are now in a position to develop cutting-edge services and products thanks to digital transformation, such as peer-to-peer lending platforms, robo-advisors, and fast payment solutions. Making decisions based on the data provided. Utilizing data in this way enables financial institutions to make more educated choices regarding risk management, product creation, and market strategy. Efficiency in compliance and regulatory oversight. Digital solutions have the potential to expedite compliance operations, thereby relieving the load placed on banks and ensuring that they adhere to ever-evolving regulatory norms. Concerns and things to take into account. Problems with online safety and security. A heightened risk of cyber attacks and data breaches comes along with an increase in the use of digital technology. The implementation of security measures should be a top priority for banks. Systems with a long history. A great number of financial institutions continue to rely on old legacy systems, which can slow down digital transformation initiatives. The process of modernizing these systems is one that is both difficult and expensive. Protecting the privacy of data. A strong commitment to privacy standards such as GDPR and CCPA is required in order to collect and manage data pertaining to customers. The compliance with data protection and consent regulations is required of banks. Expertise in digital media. It is of the utmost importance to ensure that consumers, particularly those of older generations, are familiar with the tools of digital banking. Rivalry from emerging fintech companies. Startups in the financial technology industry are nimble and may swiftly launch novel solutions. The only way for banks to effectively compete with them is to work together. The integration of the financial ecosystem. Banks are increasingly interested in expanding their horizons beyond the typical financial services they provide in order to become key actors in more comprehensive financial ecosystems. In order to accomplish this, we will need to work together with fintech startups, insurance companies, investment firms, and other stakeholders to provide customers with all-encompassing financial solutions. For instance, a single platform might be used by banks to provide customers with investing services, insurance products, and financial planning. Authentication using biometric data. Banks are increasingly embracing biometric identification systems such as fingerprint recognition, facial recognition, and voice recognition to increase both their level of security and customer convenience. Customers benefit from a higher degree of security provided by these technologies, which also make the process of logging in and verifying transactions easier for them to complete. Robotic process automation, also known as RPA. Automating ordinary rule-based processes such as data input, account reconciliation, and compliance checks is a goal of RPA implementation in the banking industry. This not only helps cut down on errors, but it also frees up human workers to concentrate on more difficult and important responsibilities. Decentralized finance, often known as DeFi for short. The idea of decentralized finance, also known as DeFi, is gaining popularity despite the fact that it is only in its early stages. Platforms that utilize decentralized finance, DeFi, do away with the traditional middlemen that are required for the provision of financial services like as lending, borrowing, and trading. Banks are exploring partnerships or investments in DeFi projects to stay ahead of emerging trends. The verification of digital identities. The use of client onboarding processes that are secure in the digital environment is increasingly dependent on the availability of digital identity verification solutions. Banks are implementing innovative techniques of identity verification, such as document scanning, face recognition, and identity verification based on blockchain technology, in order to streamline the onboarding of new customers while also meeting the standards of regulatory agencies. Sustainable finance and caring for the environment. A number of financial institutions are now implementing sustainable practices into their digital strategy. They provide solutions for green finance, including as ecologically responsible investment products and loans for initiatives that are beneficial to the environment. In addition, banks are adjusting their business practices to conform with the concepts and reporting requirements of ESG, environmental, social, and governance. Transactions in real time. In many parts of the world, real-time payment systems are rapidly becoming the standard. Banks are increasingly embracing immediate payment systems, which enable clients to transfer payments in real time. This increases the pace of financial operations and makes them more convenient for customers. The investigation of quantum computing. While quantum computing is still in its infancy, several forward-thinking banks are investigating its potential applications in risk modeling, fraud detection, and optimization challenges despite the fact that it is still in its early stages. Computing based on quantum mechanics offers the ability to solve difficult financial calculations far more quickly than traditional computers. Voice banking. Voice-activated banking services are becoming increasingly popular. These services enable consumers to conduct transactions, check balances, and obtain other financial information by using voice assistants such as Alexa from Amazon or the Google Assistant. Regulation technology, often known as RegTech. Automating compliance operations, monitoring regulatory changes, and ensuring conformity to ever-evolving financial regulations are all top priorities for banks, which are driving increased adoption of RegTech solutions. RegTech has the potential to both save expenses associated with compliance and improve accuracy. The practice of hyper-personalization. Banks are able to deliver incredibly tailored financial advice and product suggestions by utilizing cutting-edge data analytics and AI technology. This level of personalization has the potential to increase opportunities for cross-selling as well as strengthen consumer loyalty. In conclusion, the process of the banking industry's digital transformation is a dynamic one that is defined by ongoing innovation and adaptation. The opportunities and trends that will be explored here are reflective of the continual efforts that the sector is making to provide clients with financial services that are streamlined, secure, and valuable. Banks that are nimble, customer-focused, and willing to embrace innovative technologies will be well-positioned to flourish in the ever-shifting world of digital banking. This is because technology is advancing at an ever-increasing rate. Share your thoughts on this in the comments and subscribe to our channel for more amazing videos and updates.